Veterans, did you know you can lower your mortgage payment without income docs or an appraisal? That's right. If you already have a VA loan, you may qualify for what's called a VA IRRRL. It's an interest rate reduction refinance loan. It's designed specifically for veterans, and it's hands down one of the easiest ways to save money every single month. And the best part, you guys, the process is faster, it's simpler, and it's way less stressful than a traditional refinance. So stick with me for the next few minutes because I'm gonna break it down exactly what it is, how it works, and whether it makes sense for you right now. Let's start with the basics. The VA IRRRL, sometimes called the VA Streamline Refinance, is a special program for veterans who already have a VA loan. Its purpose is simple: to help you get a lower interest rate or lower your monthly payment with as little hassle as humanly possible. Unlike most refinances, you don't need brand new appraisal, and in most cases, you don't need to re-verify your income or your employment. That's why it's called a streamline, because it's fast and it's straightforward. So the Department of Veteran Affairs created the IRRRL as a way to honor veterans by making sure they're not stuck paying higher interest rates than necessary. Mortgage markets change, rates go up and down, and this program ensures you always have a simple path to reduce your cost to home ownership without jumping through a bunch of hoops. It's basically the government saying, you served our country, you earned the right to refinance with less red tape. So now let's talk about the benefits, because this is where it gets exciting. There's no appraisal needed. That means even if your home's value has dipped, you can still refinance. That's a massive advantage. There's no income verification. Most refis require pay stubs, W-2s, tax returns. Not in this case. If you've got a VA loan and you have a good payment history, you're in great shape. So lower rate, lower payment, and this is the big one. If rates have dropped since you've got your VA loan, you could shave hundreds off your monthly payment. Quick and simple process. The traditional refinances can take weeks of paperwork. A VA IRRRL is designed to be faster, often closing in a fraction of the time. There's options to roll in closing costs. You don't want to pay all the fees out of pocket. In many cases, you can roll all the closing costs into the new loan itself. It's literally the easiest refi in the industry. And here's the great part. The requirements are minimal. You already have a VA loan. You're current on your monthly mortgage payments. The new loan lowers your interest rate or payment unless you're switching from an adjustable to a fixed rate, and that's it. No minimal credit score requirements from the VA, no home equity requirement, and again, no appraisals needed. So if you check those boxes, chances are you qualify. Now, you might be asking, should I do this? It makes most sense if your current VA loan has a higher interest rate than what's available today. You want to lower your monthly payment and free up some cash flow. And you want to refinance from an adjustable rate loan into the safety of a fixed rate. So even saving $100 a month adds up to $1,200 a year. Over the life of your loan, that's tens of thousands of dollars saved. The only time it might not make sense if you're planning to sell your home within the next 12 months or maybe the next year or two. So won't stay long enough to see the savings add up. So let's recap. Veterans, if you already have a VA loan, the VA IRRRL is your shortcut to a lower payment, a lower rate, and a hassle-free process. No appraisal, no income verification, just savings and simplicity. Here's what I want you to do. If you're paying more than you should, or even if you just want to find out if you qualify, send me a quick message. I'll run the numbers and show you in black and white exactly how much you could save. You've earned this benefit. Don't leave it on the table. Let's put that money back where it belongs, and that's in your pocket.